Hello everyone and welcome to your Glassnode video report for week 16, 2022. Today we're going to explore a very interesting dynamic, which is the changing ownership structure of Bitcoin. And we're going to put a particular focus on the long-term and the short-term holder cohorts. Now, Bitcoin is a global asset. It trades 24/7. It trades in every country and in every fiat pair. And as a result, it tends to respond to many of these macroeconomic and geopolitical headwinds. We're seeing commodities hitting all-time highs. We're seeing bond yields screaming higher. And we're seeing a great deal of correlation with traditional markets like equities and bonds. So Bitcoin is one of these global assets. It does respond to an enormous array of information, and therefore we tend to use the study of its overall holding behavior as somewhat of a proxy to understand what are people doing, what are the decisions that they're making, and what is the overall sentiment of these two different cohorts. So as we saw this week, we traded back below 40K, which is a little bit of a sign of weakness. We're seeing that there's still pressure on prices. Now, with that even said, we've been in this consolidation range between about 35,000 and 42,000 for about 2.5 months. And that follows a 2.5 month correction from the November all-time high. So if we combine that, we've essentially been in this downtrend since the all-time high for about 5 months. Now, this puts us into an interesting position because our long-term and short-term holder threshold, this is the definition that we use to really define these two different cohorts of Bitcoin holders depending on their spending behavior. Long-term holders typically hang on to their coins and wait for the next macro bull, whereas short-term holders are a little bit more price sensitive and they tend to spend in the face of volatility, whether it's price moving up, they take profits, or it trades down and they sell at a loss. So this threshold that we use is based on statistical analysis, and it's about 5 months long, 155 days. So this puts us in an interesting position where almost every coin that was purchased before the November all-time high is now a long-term holder supply. They've seen volatility, they've weathered a whole lot of this mess, and they still haven't sold. And on the other side of that is everyone who's purchased within this correction, by and large, is going to be classified as a short-term holder. Now, obviously, there's going to be some long-term holders that are adding to their balance, and there's short-term holders that are coming in and they're actually intending to become long-term holders. But what we use is this data to try and break down these cohorts and understand just what's going on within the actual investor cohorts, and what their sentiment is the most important part. So we're really going to deep dive into this long and short-term holder sentiment, explore it on a number of levels. We're going to look at the changing ownership structure of Bitcoin over time in these bear markets. Coins flow typically from short to long-term, but also you get long-term holders that capitulate. So we're going to look at this concept of a capitulation event, which actually appears to have happened under the surface. So quite an interesting, and this is quite a complex and challenging newsletter. So stick with me. This is one that's got a little bit more detail, a little bit more statistics, but we'll work through it one at a time. So as usual, please do give us a comment if you're enjoying this type of content. Please do give us a subscribe and a like. It does help this channel get more attention and really show more people the power of how Onchain could be used as part of your information set alongside all the other things that are available in this market. So let's get started. So starting with our price action, you can see that we continue to trade within this current consolidation phase. We've pulled all the way back in. We've found another local low, but again, we're still within what could be a bottom formation. It could just as equally be a large scale bear flag. So really, we haven't got momentum in either direction. We tried to break higher, but it got pushed back down. We've tried to push lower, but it too has failed to gain any kind of momentum outside this range. This overall $35,000 to $42,000 realm really has shown to be a source of gravity. Bitcoin price keeps getting attracted back to it. It doesn't yet have the thrust to push it higher away from it, and it also doesn't yet have enough bears there to push it down lower. So we're really still in this kind of limbo land where it's trying to just find out exactly where the macro market wants to go. And we can see that our accumulation is sporadic. Sometimes we have bursts of accumulation, then we have periods of distribution, then we move back into accumulation. It's very much in this kind of in-between consolidation. The market's trying to work out what Bitcoin is worth. Now, during this process, the URPD, this is the UTXO realized price distribution. So the way to think about this, you may have seen a volume profile in technical analysis, looking at where all of the volume is transacted at different price points. So you can see that on the left-hand axis, we have the number of coins in BTC terms, and on the x-axis, we have all these different buckets in terms of the overall prices at which those coins have moved. Now, unlike a volume profile in technical analysis, which is a total sum, how much volume is traded over time, what this is looking at is just the current Bitcoin UTXO set. All of the coins within the Bitcoin network, what is the price when they have last moved? Now, what you'll see is that over time, when we are up at the all-time high in November and even down at the lows, $33,000 lows in the 22nd of January, we had a very uniform overall structure of this. There was kind of coins spread out all the way from 30,000 all the way up to 70,000. There was a very even distribution. Now, what we can see at the moment is we've still got much of this profile, and you'll see this in the actual Week on Chain newsletter where we actually sketch out what these look like, these two different profiles. But there's a few takeaways. Much of that fairly even distribution seems to remain. Note that we've still got a lot of coins up here in the 55 and even 60,000. There's a lot of coins that are still held up at those higher prices. Now, you would think that now that we've corrected down to 30,000, I mean, some of these coins are down more than 50%, you would think that a lot of these holders would have sold out and capitulated. Now, indeed, some of them have. You can see that we've got a massive amount of volume that's been moved over here between around 35 and 42,000. There's a huge demand node that we've seen that has really been built up over the last couple of months. So we can see that our current consolidation price range really does show to be a level of demand. We've seen investors stepping in and seeing value. And this is actually quite similar to what we saw back in the May, June, July period of 2021. We saw a similar filling out, except that was down in the 30 to 40,000. This is now in the 35 to $42,000 realm. So we are seeing that despite some of the headwinds that we've seen, despite the fact that prices struggle to get upside momentum, one takeaway from this is that we still have that demand profile in our current price range. We're seeing that investors are seeing value. Now, again, that doesn't mean that this is going to be the ultimate bottom. It may be. It also may not be. But what we can take away from this is that we are seeing investors seeing demand within this current price zone. And the second takeaway, and we'll move on to the next chart shortly, that we still have a great number of coins that are held above that current price. Now, after 5 months of a downtrend, a lot of those coins will have redistributed, which is why we have such a full zone here. But it's interesting to note that we still have quite a number of them in this higher price range. So this is where we're going to break out. This is an unreleased metric from the Glassnode engine room. It's currently in the pipeline being constructed. And this is that same volume profile, except we've broken it down to 3 different groups. Short-term holders in red, long-term holders in blue, and exchanges, which we actually separate out from that supply in gray. So we can more or less ignore those for now. We're just going to look at the long and short terms. Now, what I want you to note, see this volume that we've seen up above 50,000? Note how most of it is long-term holders. Only very, very few short-term holders still in there. Now remember that our long-term holder cutoff, that distance between when you're short and long, is pretty much at the November all-time high. So all of these red coins that you see down here are those people who purchased on the way down following the November all-time high. So these are people who thought it was the dip. Turns out that it wasn't actually the dip. Now, this used to be a lot fuller. There was a lot more short-term holders in that price zone, but they've essentially been flushed out. They're the people who bought the dip, it went lower, and they panic sold, and they continue to redistribute their coins. Now, the long-term holders that we see here are people who purchased on the way up. They're from August through September, October, and then November. So these people have actually seen that 50% correction and they remain relatively unfazed. So now that they're in that long-term holder cohort, they are the least likely to spend. It doesn't mean that they won't, the risk still remains, but they've kind of already seen a huge amount of volatility and they haven't sold yet. So that's just a piece of information we can take away. Now, the second thing I want to highlight is note how large this short-term holder cohort is. This is really, really important. This is the thing I want you to take away from this entire process of this video to keep this in mind as we step through all of the following charts. So these short-term holders, note that there's a huge cluster between, again, around 38,000 all the way up to 50,000. Now, these folks, remember, they're people who have purchased following the November all-time high, and given the current price range, there is a huge amount of this accumulation that has happened in the current price zone. So what we've seen is that irrespective of whether long-term holders sold and panic sold or capitulated, whether short-term holders bought the dip and it wasn't the dip and they sold, irrespective of where those coins came from, we have seen a huge influx of demand. This is relatively new demand in this $38,000 to $50,000 realm. So we've seen this kind of value zone. Investors believe there is value in this current price zone. So this is kind of a takeaway. And now we're going to look at where did those coins come from? How did they come to, where did they come from in terms of price realm? Were they long-term holders that sold? Were they short-term holders that sold? We're now going to categorize how did these coins end up being redistributed and sold to these new buyers down here in this price realm. So this is where we're going to look at our long-term and short-term holder supply in loss and profit and loss. Now, this is a very big picture metric. It kind of puts all of the supply dynamics of long and short-term holders into one chart. So long-term holders are again in blue, short-term holders in red, and you'll see that in profit is in dark colors and in loss is in these lighter colors. So let's actually just describe, let's zoom in on the last 5 years, and let's just describe what a bull and a bear market cycle really looks like. So at the peak of the bull, when we're kind of getting into that phase, you can see in 2017, just before we went parabolic, and again, just before we rallied up to the all-time high here in April, we have this period that I call peak hodl, where the number of long-term holder supply is at a maximum. And note that they all return to profit. As we push to all-time high, by definition, all of these long-term holders are now in profit. We can see the same thing here as we broke the 20,000 all-time high. Now, long-term holders typically sell into that market rally. As the market pushes forward and there's more demand coming in, long-term holders sell their coins to short-term holders. All those short-term holders initially are in profit because we're at all-time high. But then as the market gets oversaturated and there's too many short-term holders, too many new buyers, not enough strong hands, we then enter into a period of a lengthy bear. And note that the overall losses swell up much, much higher. We see lots of short-term holders push into a loss, and we see long-term holders even move to a very significant loss. But what I want you to note is that the long-term holder supply, even though they're in loss to a great margin, continues to climb. We've seen the same during this current bear market. We've seen long-term holder supply continue to climb. And what this is showing is that irrespective of price, even though the market keeps going lower, and even though the market continues to show red candles, these long-term holders continue to stack and hold their coins. It's a sign of conviction. And we can see here that at the current market structure, about 50-50 split. Of all of the coins that are in loss, it's about 30% of the total supply is currently at a loss, which means it was purchased at a price higher than where we currently are. About half of those, 15%, are owned by long-term holders, and the other half is owned by short-term holders. Now note that when we're at the absolute lows here of the 2018 bear and then again in March 2020, so we have 30% of the supply right now in loss. Back then, in both of those instances, long-term holders alone owned 35% of the supply in loss, and yet they still hodled through it. You can see this because our long-term holder supply, see how it kind of just trades sideways for multiple years? So even though they're holding 35% of the supply in a loss, plus an additional 20-something% by short-term holders, so over half the supply is held at a loss, note that they continue to hodl throughout that whole process. There's obviously churn, there's people who are selling and panicking, and as we have the 2019 rally, we have a little bit of a distribution, but overall, they've hodled very, very deep losses. So where we are at the moment, where it's 15% and 15%, it's actually a much better position in terms of network profitability than what we've seen in previous bears. So even though it may feel a bit grim, we've gone through 50% corrections, if we consider the overall supply profitability as a balance sheet, the market's actually in not a bad position, especially relative to previous bears. Essentially, long-term holders have weathered far worse storms in the past. Now, that doesn't mean that we may not trade lower and we have to actually see 35% of the supply go into a loss. But right now, there's kind of there's less coins at a loss that could kind of trigger that kind of fear and panic. We have to wait and see. Again, we need to see that influx of demand to really provide that support. But so far, the balance sheet overall of holder structure is not as bad as we've seen in previous bears. Now, we can see this in our total supply in loss held by short-term holders and by long-term holders. Now, what we're looking at here, this is in terms of total coin supply. And you can see, look at the peak here. We've got 2.65 million coins held by short-term holders in loss. Now, this is similar to what we had here in 2019 following that rally. We saw a rally from 4,000 all the way to 14,000, and we saw that a huge number of people purchased on the way up, and look how quickly they all moved back into a loss. We see this massive spike back up to this 2.7 million coins that are currently held at a loss, or in this instance, about 3 million. So we saw it again here as we rallied into the all-time high in April. Let's actually just zoom in the last couple of years. As we pulled into the all-time high back in February, March, and April of 2021, as we fell down during that 50% correction, look how many short-term holders moved into a loss. Now note that we're actually in a better position right now, quite substantially so, in terms of short-term holders held at a loss. We're much better than we were back here in July. Now this is largely a result of this. We've seen the redistribution of people who have come in and bought that value zone below 40K, and with price where it currently is, about 41,000, we've seen that those coins have essentially strongly returned to a profit, so there's less in a loss. So in terms of the balance sheet, again, we're in a better position than even we were back here in July. Now, the flip side of that is here we are in July. Let's zoom in on that last 5 years again for long-term holders. Note that our long-term holders back in July and September, there was very few of them that were holding coins at a loss. Whereas now they're holding far more. It's almost twice as many coins held by long-term holders at a loss. But remember that long-term holder cohort are the least likely to spend. We would actually prefer them to have more long-term holders at a loss than short-term holders because they're the least price sensitive. We see a very similar thing through 2018. Note how the long-term holders at a loss continues to swell higher and higher and higher. This is actually not the worst thing because it's showing that those long-term, less price-sensitive investors continue to accumulate coins. They're not particularly fussed if they buy it and it goes lower. This is what we see in their statistical behavior. Once they reach long-term holder status, they're more likely to stick it out and actually weather the volatility that comes. And we can see that this rally that we had in 2019 plunged a lot of those, well, plunge is the wrong word, moved a lot of those long-term holders back into a profit. This was a very rapid move that got long-term holders back into the green and therefore more likely to hang on to their coins until the next all-time high. So what we just discussed there was the rate of change, or how quickly long-term holder or short-term holder coins in loss, specifically in loss, how quickly did that change? So I'm again going to zoom in on the last 5 years. Now, this is a couple of more complex models. This is where it starts to get into a bit more of the statistical realm. Let me describe what these oscillators are showing. On the left is long-term holder supply. On the right is short-term holder supply. And what we're looking at here is how quickly did coins move into, which is a negative value, into a loss, or into a profit, which is a positive value. So we're looking at how quickly did coins move into loss or into profit. So let's take the 2018, for example. We saw this massive collapse from 20,000 down to 6,000, and we started to form this price floor. Now, a lot of long-term holders purchased on the way up, and we can see this is them showing up 5 months later as moving their coins into a loss because they purchased on the way up, but overall the market continues to slide away from them. So a huge number of these holders moved into a loss. Now, as we had our 2019 rally, a huge amount of them that purchased $6,000 and $8,000 BTC, as soon as price gets above that level, a massive amount of that supply moves back into profit. So we see this positive value. Now, what we saw during our current market structure, we saw our drawdown, and we saw very, very similar in terms of the amount of long-term holders on the way up. There wasn't a great deal of time up here. We're up on this topping pattern for about 3 months. So you can see we didn't quite form the long-term holders at the top by the time we'd already moved into this correction phase in May, June, July. But what we did see is a lot of those buyers from the first part of the bull, as we rallied into the October and November all-time high, a number of them moved back into profit. However, all of those long-term holders from this process, many of them believed that the bull market was back on and we were no longer in a bear. And note how quickly, see this negative print? It's one of the largest in history. So this correction that we saw from the all-time high from November actually caught a lot of long-term holders off guard. They didn't realize that they were actually moving back into a bear market, and a huge amount of them very, very quickly moved into a loss. And we can see this explosion in loss-making long-term holder coins. A lot of them were caught off guard by this correction. Now, short-term holders are very, very similar, but they're much more responsive. So we can see here that there was a huge amount of buying going on in this topping pattern. We had a very top heavy market back here in March, April. And then when we had the sell off in May, look how many short-term holders who just bought the top. These are top buyers who immediately move into a loss. Huge amount of coins. Here it is here. This massive explosion of loss-making short-term holder coins suddenly happens at the exact bottom. Now, conversely, we then saw a lot of redistribution. People who bought the top, sold their coins in a panic. New buyers came in who at that time were short-term holders. They're coming in and they're buying that 30 to 40,000 realm. Now, as we then rallied up to the all-time high in October and November, all of those coins moved back into profit. So we see this massive swelling of coins in the other direction. That's the collapse. All of these coins move from being in a loss back to being in a profit. We see this massive explosion of coins getting back into profit. And almost like clockwork, we see the exact same thing happen. Short-term holders who bought the lows sell the very top again, and then when the market falls out from under them, just like long-term holders, they immediately fall back into a loss. We can see this again with this massive explosion of short-term holder coins in loss. So the way it feels like a bit of a roller coaster, doesn't it? There's a lot that's happened, and the market really has whipsawed up, back, and it's taken people who thought the bull was back on and plunged them back into a loss. The takeaway that I want you to have from this is that it has been a roller coaster, and that volatility has by its nature the ability to shake people out. People who are really not here for the Bitcoin story, they don't believe in the asset, they will get shaken out at prices when they're doing this kind of thing. They see themselves go back into the green and then they get flushed out. And then they see themselves go back into the red and they flush out again. It's this kind of whipsawing process that is typical of bear markets that generally shakes out anybody who is going to sell. And this is where we start talking about capitulation. And potentially, have we already seen the complete shakeout of many of these users? So this is where we're going to close on these two metrics. Now, these are a little bit, again, it's a little bit of a complex newsletter, but let me try and describe what's going on here. You may have heard the concept of a realized price or a realized cap in this instance. What the realized cap is it looks at the standard one. It looks at all of the coins and the price when they last moved, and it sums up what's the total amount of value. If we look at a coin that was withdrawn at $10,000 and then was spent again and sold at $50,000, then that realized cap is going to be, initially it was $10,000, but now it's going to be $50,000, so it's added $40,000. Likewise, if someone buys the top at $50,000 and then sells at $10,000, then $40,000 has left the market. It's been revalued from $50,000 down to $10,000. So the way to think about the realized cap, it's the cost basis. It's overall where everybody's coins were last moved, right? What is the price that they paid for their coins? Now we can break this down into long and short term. So we can actually look at what is the cost basis for the long term and the short term holders. Now, what we then look at is sometimes the realized cap will be rising to the upside and we get these positive values. This is looking at the amount of change on a statistical basis. How much did the realized cap increase and how does that compare to history? If it increases by a huge amount relative to what it normally does, means lots of long-term holders are coming into the system, they're buying more expensive coins, they're hanging on to them, and their aggregate cost basis is rising. And we typically see this follow the first leg of a bull by about 150 days. Makes sense. After 155 days, all those people who bought in the bull become long-term holders and their cost basis starts to rise. Now, conversely, sometimes we get these drops in realized cap. So what would cause the realized cap to drop? What would cause the aggregate cost basis to drop? Well, there's actually three mechanisms. Let's imagine that a long-term holder just purchased a bunch of coins that were very, very cheap, and then they move into that long-term supply. That's going to bring down the average. So as more long-term holders with lower cost basis enter the system, that's going to bring down the average. But we know that the threshold is currently at the all-time high. So every long-term holder that's maturing right now is going to have a cost basis of $60,000, $65,000. So we know that that can't be driving some kind of decrease, right? We know that that would actually create an increase. If there's lots of long-term holders who bought the top and they're still hanging on, the aggregate cost basis should increase. Now, long-term holders, let's say someone from last cycle, they've got a cost basis of $8,000. If they go and buy a coin that's worth $20,000 and add it to their stack, then their cost basis goes from $8,000 to $8,200. So that's going to increase it as well. If there's a long-term holder who purchased the top at $50,000 and they've just bought a bunch of coins at 40,000. Now that will bring down their average a little bit, but not really by that much. We can see that the long-term holder realized cap, it's trading down here about $14,000, 14,600. So that also is not going to have a great deal of impact. What we can see is this massive decline in the long-term holder realized cap. This is the largest we have ever seen in history. There is only one more mechanism that can cause the realized cap for long-term holders to decrease. So we've got all the long-term holders from last cycle. They've got cost basis of $8,000, $6,000, $200, very cheap coins. And we've also got long-term holders with cost basis of 50 or 60 or 40,000. What happens if all of those top buyers, all the long-term holders from this current cycle, exit and they sell and they become short-term holders? What happens if all those long-term holders who purchased the top sold and became short-term holders, they sent their coins to somebody else, but they're no longer in the long-term holder cohort? So all those $40,000s and $50,000s and $60,000 coins that were owned by long-term holders from this cycle, what if a huge amount of them exit the system? The only people who are left are people with their cycle cost basis down at 8,000 and 6,000. That's why we're having such a significant decline in the long-term holder realized cap. We've actually seen the largest capitulation under the surface of all of these long-term holders who are panicking and they're exiting the system, selling to new short-term holders and getting out, which is then bringing down the average because there's very, very few long-term holders with a high cost basis left. So it's a little bit complex here, but what we're basically seeing is that the average price of long-term holder coins is coming down because those that have a high cost basis are panicking and they're selling. And yet we're still seeing that level of demand here in that $35,000 to $42,000 realm. Something underneath us is absorbing all of that sell side. It is the largest capitulation in history by long-term holders. And yet it's very, very quiet. It's quite an interesting concept. We're seeing the flush out. And yet price is just kind of trading sideways. Like there's a big cushion underneath us, just absorbing all of that sell side. Now on the short-term holder front, we can take all of that same concept. But again, this is a little bit more responsive. We typically see that the short-term holder realized cap will follow price a lot more. It tends to follow and move around. It provides resistance in a bear. But note here that we've seen, again, the second largest capitulation in history. It compares only to 2018, both at the final flush out and in that kind of middle phase when everybody realized, oh, wow, this is a full-scale bear. So we've seen it's twice as big as what we saw back here in July. So we've seen, again, a massive decline in short-term holder realized cap as people who bought that 50,000, that 60,000, we've seen them get flushed out already. So in many ways, we've almost seen two capitulation events of both long-term and short-term holders, and yet we haven't seen the big scary wick that we saw in March 2020 or this big 50% correction that we saw here at the end in November 2018. Now, that doesn't mean that we're not going to have that. We always have to keep these possibilities in mind. But at the same time, we've also already seen a huge amount of capitulation across the board. It's widespread. And yet the market seems to be absorbing coins in that $35,000 to $42,000 realm. So it's one of these very interesting stories where we've seen the capitulation, we've seen the change in ownership structure. And again, I'll bring it back to this core metric. This is the one that I want you to take away from this session. There's been a huge amount of supply absorption by new buyers. Now, some of these short-term holders are people who've been in the space for a long time. They just appear as a short-term holder initially. But we've seen a flush out of buyers from these long-term holders, from the short-term holders, from top buyers, from previous cycles. We've seen people selling all over the place, and their supply is all congregating in this current, what investors see as a value zone between 35 and 42. Now, the last thing, just be aware of risks. This overall looks like demand is flowing in, and it looks like investors see value here. But just be careful. If we see prices trade lower, that then puts a lot of this supply back into a loss. So that is really the risk here. We need to be aware that if price trades lower, all of these coins will move into a loss, and that creates a potential sell side pressure that we just need to be aware of, because remember, no one can tell the future. We're just trying to use the data that's available to us to understand what may happen. So thanks everyone for tuning in. I know that was a little bit more complex. It's a slightly longer session, but hopefully that deep dive into how long and short-term holders are behaving right now gives you a bit more context into what's been going on under the surface. So the market's really struggling to get momentum, but that's both to the upside and the downside. There's a gravity around this current price range, and we've kind of explored why that actually may be. So nevertheless, there has been a change of ownership. We're starting to move into this new realm where we have to see how those new owners react to price, whether it rallies or whether it falls lower. How will they react to this overall behavior? So thanks as always for tuning in. Hopefully you enjoyed this session, and I will see you on Friday. Cheers.